easiest way to become rich is to subscribe to our channel Finance Tube. If you haven't done so, please do it now because it makes sense. Coming to the liability side of the balance sheet, we see that this person has a housing loan of 4 lakhs and a personal loan of 1 lakhs, totaling his liability to 5 lakhs. Rest 10 lakhs is the wealth that he has generated over a period of time through his savings. Now, this housing loan was not always 4 lakhs. He would have taken a more housing loan, but since every month he is paying EMI, his housing loan keeps on reducing. Also, the most important thing that we learn is that even though he has adequate money in his bank, but he still kept a personal loan of 1 lakh. Now, all of us know that the interest that we pay on a personal loan is much higher than the interest that we earn on fixed deposits. Then why do you think this person would have still kept his personal loan alive? Don't you think it makes more sense in breaking your FDs and paying back your personal loans? Well, it does make sense. However, this person has not done that. Why so? If we go back in time, let us say in early 1930s, there was a British economist by the name Sir John Maynard Keynes. In his book called General Theory of Income and Employment, he had successfully explained the primary reason for the Great Depression which occurred in late 1920s in America. In that book, he propounded a theory called liquidity preference theory of interest. Now, for us, he is not important, neither his book is important nor is his theory. But in that theory, he gave 3 motives for which a person would need liquidity. What are those 3 motives? A. Transaction motive, B. Precautionary motive, and C. Speculative motive. That means this person is sensible enough to keep some liquidity with himself for all these 3 reasons. Now it's fair. Every day when you go out, you carry out certain transactions, you need money. That is liquidity. For your safety or emergency purpose, whether it is medical emergency, financial emergency, or even our neighbor's emergency, we keep some cash at home, right? And lastly, we say that in our community, whenever the opportunity is knocking on your door, you cannot hunt for cash. Having said that, you always have to keep some margin, some buffer or some liquidity with you all the time for these 3 reasons. And hence, even though this person very well understands that there is a heavy cost attached to liquidity, but he has still kept some with him. So I hope you understand and it makes sense that having liquidity is critical for life. So to summarize our learnings of this video, we can say we learned 2 very important things. A. Do not keep your eggs in one basket. That means you diversify your assets. And B. Always have adequate liquidity in your hands so that when in need, you don't have to borrow from someone. The learning here is, are you able to save 20% of your take home every month? Think about it.